Let's rewind to June 23rd, one of the biggest moments in the crypto world. That's when the Fed announced it would stop using reputational risk as a factor in how it oversees banks, especially when it comes to how they deal with crypto. In a memo released that Friday, the Fed confirmed it's removing this term from its exam manuals. Lawmakers believe this term played a big role in pushing crypto firms and other businesses out of the banking system. Instead, examiners will now focus on actual financial risks. Interestingly, the Fed was the last major banking regulator to drop this term, but this shift also came with a green light for banks to move forward on crypto services. Back in June, the Fed gave banks the green light to get into crypto as long as they play by the rules. Sounds pretty exciting, right? But here's why I'm bringing this up now. Just 3 days after that announcement, JP Morgan made a major move. They filed a trademark for GPMD, covering everything from crypto trading and digital currency issuance to blockchain custody services. If we dive into what that includes, we're talking trading, exchanging, transferring, and payment services for digital assets. This means virtual currencies, digital tokens, payment tokens, and even decentralized application tokens, all backed by blockchain. It's a big deal and shows just how serious big players like JP Morgan are about diving into the crypto space. This also includes electronic fund transfers, securities brokerage, real-time token trading, custody services, and secure online financial transactions. Remember when JP Morgan jumped into the game? I said it then. Every major bank is going to follow their lead. Why? Because we're talking about the world's biggest bank diving headfirst into tokenized deposits and stablecoin initiatives. That's a big deal and really sets the tone for what's coming. The reality is every major bank is gearing up to follow JP Morgan's playbook. Most are already testing the waters with private blockchain technology, just like JP Morgan did with private Ethereum through Onyx. Now they've taken it live with Connexus. Big news in the crypto world. Deutsche Bank just announced they'll be launching a crypto custody service in 2026. Huge move, right? And they're not alone. Germany's largest banking group, Sparkassen, is planning to roll out crypto trading for retail customers by summer 2026. Things are heating up. On top of that, Fidelity and other major firms are applying for Bitcoin and crypto bank charters, representing a massive $5 trillion in assets. The banks are coming, and it's clear they're ready to jump aboard the crypto train. Oh, and here's another big one. Kazakhstan is gearing up to launch a state-backed crypto reserve managed by its central bank. It's official. Crypto is no longer just for the early adopter. Why is this so exciting? Because the market is finally opening up. We're about to get some much needed clarity for crypto, with stablecoin legislation and market structure expected to be fully passed by the end of August. Think about it. Things are about to heat up big time, especially on the traditional finance side. Big banks, Wall Street, and asset management firms are gearing up to dive into crypto. This is exactly what I've been saying for years. We needed to prepare before the major players like banks and institutional investors join the game. Well, now it's happening. The big names are starting to jump in, and this is going to drive massive adoption. Their clients will naturally flow into crypto as these services roll out. Just look at what JP Morgan and Deutsche Bank, Germany's largest banking group, are planning. They're setting the stage for something huge. This is all about crypto trading and custody services for retail clients. They're diving into trading, payments, and even custody services. Think of them aiming to become a full-fledged crypto bank. Yep, they're planning to apply for a charter to offer all kinds of crypto services. And here's the wild part. Even central banks are jumping on the crypto train. So here's the deal. Circle recently applied for a national trust bank license in the US, and this happened on June 30th. The moment they made that move, it was pretty obvious it was going to shake things up in a big way. Naturally, this got people talking. Suddenly, everyone was saying we're about to see more big names following Circle's lead and applying for a national trust bank license too. And you know what? They were absolutely right. Honestly, it wasn't surprising. It was kind of inevitable. Let's dive into this. Eleanor, Tourette, and Circle have shared some exciting updates. Several crypto companies, including Fidelity Digital Assets, have applied for national bank charters from the OCC. Why does this matter? Well, the OCC, along with the FDIC and the Fed, recently gave the go-ahead for banks to offer crypto services. Yep, banks can now jump into the crypto world and provide crypto-based services without needing money transmitter licenses to operate across state lines. Fun fact, Ripple already has money transmitter licenses in nearly every state, which is a huge win for them. These applications are part of a growing trend of crypto firms lining up for approval, especially with the incoming OCC chair Jonathan Gold, who is expected to bring a crypto-friendly approach once confirmed by the Senate under the Biden administration. Only one crypto firm, Anchorage Digital, has been granted a charter so far, but here's something I've been saying for ages. Ripple might be on its way to becoming a bank. Seriously, we've been talking about this for years. Even back in April 2024, I mentioned that with Ripple launching a stablecoin, it really seemed like they were heading in that direction. And guess what? The speculation about this actually started all the way back in 2020. So now it looks like this might finally be turning into a reality. In my opinion, the XRP ledger and XRP are going to play a critical role in all of this. Just take a closer look at the moves Ripple is making right now. For example, let's revisit Roth Economist's post from April 12th, which highlighted some exciting developments like XRP ledger tokenization, NFTs, liquidity pools, KYC and AML features, regulatory compliance, custody, DID, and even lending protocols with XLS 66D. If you look closely, Ripple is starting to feel more and more like a bank. Anderson made an interesting point. Issuing their own stable coins would really be the cherry on top. And yes, that stable coin is exactly why Ripple's current position looks a lot like they're stepping into banking territory. Ledger Insights weighed in on this too. They pointed out that Circle applied for a national trust bank charter and is aiming for a Fed master account, which would give them direct access to central bank money for stablecoin reserves. Ripple seems to be on a similar path, applying for a master account for RLUSD. Why? It's all about institutional use. Well, let's dive into this post. First off, they break down a few key points, starting with Circle. There's some interesting talk about their connections to BlackRock. Plus, there are a few other big players in the mix, like Paxos, Gemini, and even Ripple. Well, technically Ripple's subsidiary, the one that issues RLUSD. And then there's a standout quote from Jeremy Allaire at Circle. He talks about how applying for a national trust charter is a proactive move to strengthen the USDC infrastructure. This would help create solid market-neutral infrastructure that leading institutions around the world can rely on. Pretty exciting stuff. And if you scroll down a bit further, you'll see Ripple making moves in the central bank reserve space too. Custodia Bank made headlines when it applied for a master account, got rejected, and then decided to take legal action against the Federal Reserve. They're not alone. Other digital asset focused firms like Kraken Financial, Wisdom Tree Trust, and Standard Custody and Trust also have applications pending. Fun fact, Ripple actually bought Standard Custody last year, and it's the issuer behind Ripple's ROUSD stablecoin. Here's the tricky part. The institutions are classified as Tier 3 by the Federal Reserve, meaning they're considered lightly regulated. Because of that, their applications go through a much tougher review process, making approval far less likely. But Circle's proposed structure might give it a leg up in navigating these challenges. A national trust bank chartered by the OCC would fall under Tier 2, which means it has a much better chance of securing a master account. For stablecoins, especially ones targeting institutional clients like Circle and Ripple, the goal is to get as close to central bank money as possible. After all, that's what the biggest players use to settle securities transactions. The ideal stablecoin for institutions would be backed 100% by central bank reserves. Now, connecting this to recent developments, Ripple has officially applied for a national banking license. This move aligns with the growing trend of crypto companies stepping into mainstream finance. It's a huge signal that Ripple is aiming to position itself as a major player in the banking world of crypto. This is a big deal and definitely worth paying attention to. It's also incredibly bullish news for Ripple's future. As Brad Garlinghouse, Ripple's CEO, said, "True to our long-standing compliance roots, Ripple is applying for a national bank charter from the OCC. If approved, we'd achieve both state oversight through the New York Department of Financial Services and federal oversight, a new benchmark for trusts in the stablecoin market." Earlier this week, through Standard of Custody, we also applied for a Fed master account. While Congress works on establishing clear regulations and banks start leaning in after the OCC2 era, this access would let us hold RLUSD reserves directly with the Fed. That means even greater security and a future-proof foundation of trust for RLUSD. At Ripple, we've always been committed to building reliable, secure, and trusted infrastructure for a market worth over $250 billion. RLUSD stands out by putting regulation first, setting the standard institutions need. Big news. Ripple is officially on track to becoming a bank. Ripple CEO Brad Garlinghouse has confirmed it. And here's the part that blew my mind. He mentioned that this move would let Ripple hold RLUSD reserves directly with the Federal Reserve, adding an extra layer of security to build trust in RLUSD for the future. Wow. If Ripple gets approval, this could be a game changer. Ripple and the Federal Reserve, that's huge, especially when you consider their connection goes back as far as 201-52016. This is a big deal. Honestly, I think this is something that deserves attention, even from XRP holders. RLUSD, even though much of it isn't issued on the XRP ledger yet, is on the verge of getting mainstream adoption. We're talking about the largest banks and even the Fed jumping on board if this gets approved. So what are the chances it actually happens? I'd say they're pretty high. Why? Because RLUSD checks all the boxes. It's fully regulated, fully transparent, and fully backed. Ripple as a company has always played things by the book. Even during the SEC lawsuit, they were working to stay transparent and cooperative. That's worth acknowledging. This is easily one of the biggest announcements in Ripple's history, and it's for good reason. It signals something huge, the growing legitimacy of RLUSD in the traditional financial world. Let's talk about the second point, which ties directly to the Fed. The fact that the Fed will be holding RLUSD reserves is a big deal, and it actually connects to something Ledger Insights pointed out before. If we take a closer look, they mentioned that these reserves would place RLUSD in a tier 2 category. Why is that important? Well, it opens the door for institutional players to fully embrace RLUSD and use it to settle securities transactions. And just to put things into perspective, the DTCC, which is already diving into tokenization and distributed ledger technology, DLT, sells over 3 quadrillion in securities transactions every year. Yes, quadrillion. So this is huge. It's not just about Ripple edging closer to becoming a bank, which is already pretty exciting. It's also about positioning RLUSD as a top tier player, right up there with USDC. This is a big deal because it opens up a huge market opportunity for RLUSD, especially in traditional areas like securities transactions. If this gets approved, I really believe RLUSD will level up in a major way. We're also likely to see a lot more utility around RLUSD in the XRP ledger. Right now, RLUSD is mostly issued on Ethereum, but with the EVM sidechain now live on the XRP ledger, things could get interesting. Let's face it, the Ethereum network just isn't built to handle transactions at scale, especially for something like securities. So keep an eye on this. If you found this helpful, don't forget to like, subscribe, and turn on notifications for more free content. Thanks for tuning in. Catch you next time.